What's going on, guys? Welcome back. So, obviously I'm back here on the channel for the first time in a few months. I do apologize for not putting out content that often, but I did need to focus on myself. A lot of things have been going on in my personal life over the past few months, and at the end of the day, I'm also graduating from college in just a few weeks. It's a little weird. I'm going to be graduating from my bedroom. That's going to be a little jarring, to say the least, but, I'm essentially wrapped up. I am pretty much squared away to graduate. No problems asked. I'll be having, magna cum laude, all that stuff. So I can spend time now focusing on YouTube again. And what better chance to come back into the YouTube scene than when there's an entire economic collapse happening at my fingertips. So in this video, I'm going to be kind of going over my 2 cents on the COVID situation right now, what's going on with the whole macroeconomic setting, what do I think is going to be happening to businesses, and then also kind of looking at the market right now and how we've all noticed the massive rally that's been going on the past 2 weeks. Do I think that that's here to stay? Is the worst behind us, or what's really going on? So I'm going to be going at a high-level view to kind of talk about my opinions on the market environment, kind of backed it up with a little bit of logic and numbers as I normally do, and then kind of just leave you guys with my, overall takeaway from the current economic environment. Now, again, I'm not a financial advisor. I'm just a guy that's going to be graduating with a finance degree in just a couple of weeks now. All of this should be taken with a grain of salt. But I do think that a lot of my reasoning makes a lot of sense. So you guys are interested or confused about what's going on in the macro environment right now, I would highly recommend to wait to the end of the video and then leave any questions you have for me in the comment section down below. I will try to get back to all of them. So just really quick, what's going on right now? Obviously, we all know that there is a very rampantly contagious virus pretty much plaguing the entire world right now. The coronavirus, aka the thing that gives the COVID-19 disease, is an extremely infectious virus that, while for the majority of people means nothing more than, say, a bad cold or a bad case of the flu, for a small percentage of people, it is an extremely deadly and life-threatening disease, and thousands of people have been dying around the world because of this virus, and because of how contagious it is, the amount of cases that are going out are ballooning at a very unprecedented level that no one in the entire world expected to see coming into 2020. Now, where does that leave people like you and I? We are probably, depending on where you live, you are experiencing a lot of lockdowns, self-quarantining if you ever have any type of symptom, the inability to really get tested for this disease without, being on a long waiting list, or unless you're actually being admitted to the hospital because of how bad your symptoms have gotten. And essentially everybody's at a standstill right now. You can see me, my work has been removed online, so now I work from home. All of my classes at my university are now all from home. I essentially don't need to ever leave my house, and it is strongly recommended by the Massachusetts government that I do not leave my house. So you are filled with an environment right now where everybody's essentially locked into their own house. They're not able to communicate that much with the outside world. They're also not going out and spending money, and that's something I'll get into in just a bit. But right now you have everybody is either fortunate enough to be locked in their house and work from home, or people are now forcibly locked in their house without a job now that they're on unemployment, or for the unfortunate people that are essential workers, now they are pretty much forced with having to go to work in a very dangerous environment and, are going to be scared for their life and doing as minimal contact with other people as they possibly can to meet their daily job function. So this is a really interesting situation we have right now, and that's just kind of on the social society landscape of what's going on. To really paint that picture, it's really interesting that you have to understand that this is a starstruck moment for literally the entire world. There's no one in the world that expected that this was going to be on the radar, and if you did, I'm sure you had 20,000 other scenarios that you were thinking about, but I highly doubt that you actually put any weight to this situation happening, say, back in 2019. And pretty much the biggest caveat and the biggest wild card that is in all of this is that no one really knows when this is going to be over. We are expected to be having vaccines to roll out to deal with this virus, but essentially until the end of next May, we are not expected to even have the earliest possible release of a vaccine at scale that will allow people to actually start to get vaccinated for this and potentially be immune to this disease. We do not even know if that's going to happen. The disease could mutate. The disease might actually not be able to be vaccinated in the sense with a lot of other diseases that you can get the vaccine, you can build up an antibody to it, but it mutates so quickly, you just still re-catch it. There are a lot of variables that could happen, and right now, from what the majority of health organizations are saying, we have at least a year before the best case scenario starts to pan out. So we're left with a lot of questions as a society, let alone an economy. What the heck do we do? Now, jumping over what's going on with the economy, we have a lot of major moves happening. And for the first time in a very long time, both the government and the Fed and private businesses are really trying to actually, react to this situation as fast as possible. Obviously, I don't need to tell you guys that them reacting to it as fast as possible still has numerous flaws with their plans, but they have been reacting in a much faster rate than they were, say, in the financial crisis, mainly because this is a health-related issue. Everybody, all hands are on deck. No one thinks that this is just kind of a, toss it into the water type of situation. And we all need to really understand that anything can happen. No one knows what's going on right now. So you have the Fed that dropped interest rates to near zero, the lowest rates since the financial crisis. You have the Fed pumping in trillions of dollars of liquidity in order to kind of cushion any type of crash. They are, printing money essentially so that way anytime that there is a buyer or a seller in the market, there will be someone, in this case, normally a seller has a buyer. The Fed will be that buyer for the short period of time, and they've already talked about becoming a buyer for corporate debt, which is, in my opinion, a scary situation to be in when the Federal Reserve has to come in and start being essentially the broker for corporation debt. That's a really unprecedented type of environment that we're in right now, and I don't know how the markets will react to that. And now looking at the labor force, roughly 20 to 30% of people are estimated to be losing their jobs and going on unemployment during this whole thing. And who knows what that's going to be doing to the overall economy. Keep in mind, consumer spending is the biggest chunk of the United States economy. It calculates roughly 70% of the entire economy. So if you have pretty much a third of those individuals just be unemployed and and then essentially everybody else be locked in their house, not spending money, not being able to, go on impulse buy a coffee when all their shops are closed. A lot of people are not going to be spending money. There's not going to be a lot of money going to individuals, and there's not going to be a lot of money actually going into businesses because everybody's going to be in their own house. So you have a lot of things right now that make absolutely no sense in terms of a free market economy. A lot of the systems in place did not expect people to physically not be able to go out and purchase things. Now, to caveat that, we have seen the market rally since its last cratering dip. It did go down about 30. The S&P went down about 35% at its lowest, and then it has rallied about 25% since then. And technically, that spawned a bull market, but in my interpretation of it, all it did was it meant that the market readjusted for present day risk based off of a new interest rate. If you do the math and you prescribe to like what they teach you in academics for investing, when your risk-free rate drops and it plummets to near zero, equities almost always are going to look cheap. That does not mean that equities are going to perform that well, but they look very cheap. And the issue that's going on right now is that no one can accurately predict what type of impact this environment is going to have on the majority of businesses. So all that analysts can really do is essentially say that, okay, this year is going to be a wash. I have no clue how bad it's going to get. I think it's going to be, say, maybe 50% down, 70% down, 30% down, depending on where the company is and what industry they're in. And then just go off of a risk-free rate that's essentially 0.02 or 0.05. And just kind of going off that and then making their assumptions. So that's why you see a lot of funds pumping money back into equities, because feasibly it's the only way to put their money. If you keep it in the bank, it's going to get eaten away to inflation. And if you don't put it in equities, bonds are essentially trading at nothing. So even the high risk premium that is currently going on right now, equities are just the best bet for your investments right now. So that's why it's such a weird environment to be in. QE is coming in when essentially a lot of logic and a lot of estimates around that logic don't make sense as to why stocks are still trading at levels that they were just 2 months ago. So it's a really interesting dynamic. And now tying all of that together, now that's the whole plan, tying it all together to just pretty much look at like me as an individual, moderately educated about the matter, and what am I doing? So I personally do not think we have seen the worst of this economic impact, largely due to the fact that until we hit a stable economy again, no one is going to be able to accurately predict anything going forward. I don't think as long as the average person is in lockdown in their house, the average person is going to either be unemployed, have hours reduced, or have benefits cut. I don't think they're going to be spending as often. And also the overall money being pumped into the economy right now, just with money printing and the amount of unemployment checks and surpluses that are going in, I am expecting us over the next year or so to experience a lot of inflation. And a lot of those things kind of wrapped up together bodes for a pretty gloomy looking economy. In my personal opinion, I don't see us really, hitting our big rebound until a vaccine or a way to really nip this in the bud is, 1 or 2 months out. And personally, I don't see that really being on the horizon for almost a year. So I only think estimates are going to get revised to the downside time and time again after Q1 and Q2. We're going to see exactly how that works in Q1 and how bad businesses actually get hit by this. But keep in mind, businesses have only been hit for essentially half of Q1. So their Q1 could be atrocious, and it doesn't even remotely compare with what their Q2 is going to be like. Just take an example like McDonald's, Starbucks, all of these major fast food companies. They're going to have a lot of things to deal with over the next foreseeable future until this whole thing gets wrapped up. No one can go out; they can't make money, and normally they all have debt to service. So it's going to be extremely important for you to focus on the balance sheet of these companies in today's time more than ever. The balance sheet is the health of the overall company, and in unprecedented times like this, companies that have been playing risky games for profits are probably going to lose. Be ready, in my opinion, for a lot of business grade debt downgrades. A lot of the BBB market is going to be lowered into just straight up junk bond, and a lot of companies are going to be going bankrupt because of that. So keeping that in mind, I would definitely still be, not too exuberant to pump my money into the market, even though prices are cheaper than they were a year ago. I am personally continuing a strategy of looking for great, strong financial businesses that are permanent businesses, have years and years of growth ahead of them, and that are getting bargain basement prices. So, for example, Starbucks is a company I love. Starbucks is a company that I have had numerous issues with in the past because of how, risky that their balance sheet has become. And in a situation like this, that's why we saw the stock price drop roughly 50% just a couple of weeks ago. Even for a company like Starbucks, I would not buy any shares until it's under, say, $50 a share. And even then, that wouldn't be my biggest tranche. I would wait for, say, a $35 a share. I need it to be dirt cheap in this type of environment for me to take the risk on a business that is this exposed to the negative catalysts of this type of virus. So that's my overall takeaway. I'm going to be making a video going into what does it mean to actually have a permanent long-term business that will just continue to be able to scale over time. So if you guys are interested in that, make sure to let me know in the comment section down below. And I'd be interested to hear what you guys think about this entire environment. I know I'm kind of behind the wheel here on giving updates in the financial YouTube space, but let me know what you guys think. I'll start doing a lot more videos more often. And hopefully, we all get through this in the green and we all learn a couple of valuable lessons in the short term. So thanks again for watching, guys. I will catch you in the next video. Peace.